All right. Good morning. Early morning crypto talk. Bitcoin Brandon from Los Angeles, California. Saturday morning. Still cold out here in Los Angeles. Getting ready to kick off the second to the last weekend of January. You guys realize we are close to having 1 month down already in the new year. Go figure. Go ahead and type in the chat box where you're listening in from and your name. As a disclaimer, I'm not a licensed financial advisor. I just, to get financial advice, I read the news, give my opinion, share a suggestion, and it is up to you to make an informed, intelligent decision on which direction you want to move into. There's 4 rules I live by in the cryptos. Well, not just yet. So we got Who Me? Good morning, Eldridge. Good morning. Cleve Stewart, New York City. There's 4 rules I live by in the crypto space to have success. Rule number 1, education is key. Education is everything. Rule number 2, never invest money you cannot afford to lose. Rule number 3, always get your return on investment back as fast as possible. And rule number 4, where do you see yourself in 3 months, 6 months, a year from now? What are you willing to do to make it happen? Find a vehicle like KGX, take action, remain focused, and do not get distracted. There's so many things out there that can distract you in this space. You cannot be a part of everything. Now, this is not going to guarantee you success, but it will at least minimize your risk. And that, ladies and gentlemen, is the most that we can ask for. All right, so let's get screen share started here. See what we can learn this morning. All right, first up, we always look at the crypto market. It's rising. 124.9 billion. So it's gained almost $3 billion in the last 24 hours. That's always a good sign. Bitcoin price now back up to 37.49. My mark, when I start beginning my selling again, will be when it hits the 3,900 range. We've got Bitcoin, Ripple, Ethereum, all of the top 10 coins except Tron is in the green. Best performers, Apollo Currency, 42%. Augur, 18, 10x. Any of the top coins. Neo was up 8%. Steam, 6%. All right, what about worst performers? Linkey. So not too many worst performers. The worst performers is just negative 2.45%. So the entire market is on an upward swing right now. Let's see if that's able to maintain throughout the day. Poloniex did something weird. I was looking at this morning. Their whole trade view is different. Looks like they're using a chart by trading view. So I need to play with this again because I don't see my Bollinger Bars and everything else. Everything is shifted, and I don't like when that happens. But at the same time, I want to learn how to use Binance and Bittrex trading more because there's a lot more volume there than on Poloniex. And Poloniex always seems their price, Bitcoin price right now for Poloniex is at 36.89, but on all the other major exchanges, it is at 37.49. That's 36.89, 37.49. So it's almost $100 point difference. So I guess this is a good time. Instead of me trying to relearn Poloniex, I'll go ahead and start to learn on the other exchanges. In fact, I'll probably make some money. I'll just move my crypto to the other exchanges. All right, so let's look at some news. Plunging consumer sentiment is proof. The shutdown will wipe out Dow's gains. Good morning, Bethany. The shutdown will wipe out. You know, I'm going to say that one to the end. I like what Ron Ross said yesterday. Why the Bitcoin price could fall to $2,400 and entice Wall Street to buy the dip. I think I said this the other day. I think that the price is going to fall to about the $2,500 range. I don't know when that's going to happen, but I think that's got to happen before you see a major upswing again. It's going to get below 3,000. So if you're thinking long term, you might want to just, and again, I am not giving financial advice, but following what some of the other long term traders are doing is they have all their stuff just sitting in Tether. And they're going to buy in when it gets below 3,000. They've been doing that for months now. So why the price of Bitcoin could fall, and then you're going to have Wall Street buy the dip. With the Bitcoin price continuing to hover around $3,500 following last week's sell-off, technical analysts have begun fevered debates about whether the flagship crypto will see more losses ahead. Crypto brokerage firm BitOoda believes that a further decline is likely, but maintains that this will strengthen, not weaken, Bitcoin over the long term. Does the 2011 silver bubble hold the key to Bitcoin's future? Writing in a daily note to clients, BitOoda Executive Vice President Brian Donovan said that Bitcoin is mimicking the trajectory of the 2011 silver bubble. 2011? Whoa, they went way back on that one. Which saw the precious metals, Bitcoin, silver, the precious metals spot price explode to nearly $50 and then crash soon after. Today, silver is trading at $15.59, nearly 70% below its April 2011 high. Okay, think about that. Silver lost 70% of its value. Should we just throw silver away and say, it's dead and gone? It has no value to it. That was 8 years ago. It got its high. BitOoda had been tracking similarities in the 2011 silver bubble and Bitcoin's recent price movements since early December. predicting at the time that Bitcoin would likely break toward interim lows of around $3,200 within 1 to 3 months. That thesis was borne out, with BTC USD plunging to a yearly low of $3,128 less than 2 weeks later. The firm continues to believe that silver's 2011 boom and bust provides hints about Bitcoin's midterm prospects. Unfortunately for bulls, that means a stormy forecast could see the flagship crypto drop as low as 2,400 before reestablishing its footing. See, I keep hearing that amount. Even Da Vinci said the same thing. In fact, he said actually lower. He said maybe 2,000 to 1,500, but he's going to buy in at that around the $2,500 mark when he's going to come right back into it. So why the Bitcoin price decline could finally lure Wall Street? Notably, though, BitUda believes that this next sell-off could be just what the cryptocurrency market needs to finally break the backs of the bears. With the Bitcoin price sitting below 2,500, institutional investors who missed on the historic 2017 run-up might finally feel comfortable gambling on the asset class. If this drop to 2,400 occurs, we believe new institutional players will enter this space to start reallocating their assets and resources into cryptocurrencies. Donovan concluded, since BTC has first mover advantage and name recognition, we think this might be the coin that Wall Street uses as an avenue to invest in to get digital asset exposure. I agree with that. I agree with that. So that means there's options here. I'll give you an example. For me, my Bitcoin, as far as on this account, is actually in Bitcoin and not in Tether. And I bought the Bitcoin at $39.80. You see right here? $39.80. The current price on Poloniex, $36.89, almost $3,700, which means I have a 200 point, actually almost $300 point loss if I were to sell it right now. So I have a sell order in at $40.80 because I knew that was going to get me a little more than a 2% profit. Question: do I see it going to $40.80 anytime soon? Well, with this new rise upcoming that's happening right now, you know, lowest 24 hours was $35.65. The high was $37.30. It jumped almost $200 in the course of a day. So it can happen just that fast. But when you look at the sell wall, and look, this is interesting. Look at this. The buy wall is huge as compared to the sell wall. But the sell is hitting 37.58. So I don't see it running all the way up to, I needed to get up to here, around here to get my 2% profit. So another option is if I think that this thing could hit this and then drop down and go back down to all the way to, here's where 2,500 is, around here. But that's equal to here, 4,800. So I think it's going to hit 2,500 before it goes to 4,800. So what I might do is wait for this to get as high as it can, maybe back into the 37.50 range. So now I'm only down 200 points. Sell it into Tether and then sit on it. I don't care what the price is going to do. It might go up a little, it might not, and wait for it to drop below 3,000 and then buy back into the BTC. Then that way I'm going to have a huge profit. I might end up doing that now anyway and just sit on it. But all indicators suggest that the thing is going to go below 3,000 before it has a huge bump up. We just don't know when. And I am, my goal was I wanted to flip $200 into 10,000 just on day trading. But the way the market has been going, and I haven't been day trading every day, I've been able to double it. I might take that risk, and then I may put another 500 of my own money in and continue the day trading aspect of it, so I can continue my experiment. But we'll see. We'll see what happens. Anyways, let's go on to the next article here. Cryptocurrencies follow bullish piercing pattern as buyers advance. In fact, I might do a special Facebook Live in our community group talking about that a little bit more. I'll keep that article. All right. Cryptocurrencies follow bullish piercing pattern as buyers advance. Digital currency markets have seen some gains during the early morning trading sessions on Saturday. Since our last markets update, the entire crypto economy has gained $4 billion, and a slew of the top digital assets are up between 2 to 6% over the last 24 hours. Top markets gained more than 5% in minutes. For at least a week, most cryptocurrencies have been consolidating in value and show very little signs of volatility. On Friday, January 18th, prices kicked up a notch as cryptocurrency bulls attempted to break resistance levels throughout most of the day. Finally, during the early morning hours on Saturday, buyers managed to surpass certain resistance levels, which produced gains for most of the top digital assets. At the moment, Bitcoin Core is trading at $3,745 per coin and has an overall market valuation of about $65.5 billion. BTC is up 2.5% for the day and 2.2% over the last 7 days. The second largest market cap still belongs to Ripple, and each token is swapping for 0.33 per unit, 33 cents. Ripple markets are up today by 1.8% and are up for the week at 0.31% at the time of publication. Ethereum market still holds the third highest market valuation, and ETH is trading for $125 per coin. ETH markets are up today by 2.4%, but over the last week, prices are down 1.4%. The last coin in the top 5 is EOS, which is up 2.1% today and 3.2% for the week. EOS is trading for $2.51 per coin, and markets have seen $736 million traded in the last 24 hours. A lot of volumes hitting right now. Is this what we call a psych out? You know, it's a little pump to get everybody, a fear of loss, let me get in. And then all of a sudden, a sell-off. I've seen this many times. Moving on to Bitcoin Cash markets, data shows BCH is up by 1.78%, with each coin trading for $131. Huh? Wait, Bitcoin Cash and Bitcoin SV? Let's see. Bitcoin SV, $77. Bitcoin Cash, $131. Okay, so they're just talking about the BCH, not SV. But SV still up 2%. However, markets are down over the course of the week as BCH has seen a loss of 3% over the last 7 days. The top 5 exchanges trading the most Bitcoin Cash today are LBank, HitBTC, Binance, Huobi Pro, and DigiFinex. Ethereum is still dominating the currency pairs against BCH this weekend, as the coin captures 48% of BCH trade. This is followed by USDT, BTC, USD, and JPY. Both the KRW and EUR have dipped this Saturday in regard to the spread of dominating BCH pairs. Bitcoin Cash is the ninth most traded crypto this weekend, just below Qtum markets and above the stablecoin GUSD. Looking at the 4-hour chart on Bitstamp shows BCH bulls have made slight progress during the Saturday morning trading session. The two simple moving averages still indicate the path towards the least resistance is the downside, as the 200 SMA is still above the short-term 100 SMA trend line. RSI and stochastic are coming closer to overbought regions, but are still meandering in the middle, which indicates some indecisiveness among traders. So this is Bitcoin Cash. What January 19th 4-hour chart? So it's going down right now. MAT shows in the short term prices could drop again slightly, but it also indicates the duration of today's movements looks strong. The MACD short term trend line is above the long term moving average, which suggests short term momentum will increase. Gradually increasing trade volume also indicates some short term winds have started blowing northbound. Looking at BCH order books, upward movement will be stalled up until the $150 range, and there's some smoother seas beyond that price zone. On the backside, there's some good foundational support up until $115 per BCH, but from that vantage point, things look much weaker. The verdict: bulls must break further resistance to maintain positive divergence. As traders can see, there's been many signals that show increasing upward momentum, but also signs of continued bearish sentiments as well. Some of the reversal signals 2 weeks ago and now today indicate that buyers have overcame prior selling pressure in the short term. Traders still seem uncertain of how the markets will perform in 2019 and have been playing positions very delicately over the past 2 weeks. Some of the signs that bulls may continue to push crypto prices northbound is the chart's previous reaction to lows, which can also be identified with the moving averages on the 4-hour, daily, and weekly charts. Even though the RSI and stock RSI show there may be a slight correction, positive divergences shown on the 4-hour MACD would indicate improving momentum. Range-bound activity shows may not approach the lows seen back in November and mid-December, but there has been signs of buyers showing exhaustion. Bitcoin Core prices have managed to stay above the 3,500 zone, which in turn has kept the rest of the correlated digital assets afloat. Earlier this week, the publisher of the Crypto Patterns newsletter, John Pearlstone, said that BTC bulls must stay above the $3,500 range in order to gain upward momentum. Pearlstone has identified a significantly large inverse head and shoulders pattern that has been in the making for 3 months. Since mid-November, Bitcoin has built a clearly defined bullish inverse head and shoulders pattern with a target in the $5,000 range. Pearlstone stated on January 17th, the most recent move back down to retest key support was expected as part of the pattern, and the current consolidation continues to offer an edge for the bulls as long as support holds above 3,500. So that last part's the key. 3,500. They're saying if this falls below 3,500, we may see a slide, like the last article said. But the last article is talking about 2,500. Look at this buy wall here. People have buy orders all the way down at 350, really? But look at this, it's much stronger than the sell. So it's going to, this is a buffer zone. The big wall on the sell side is a big jump between 4,800 to 4,900. So we're not going to see it go this high for quite a while. In fact, again, if you listen to Da Vinci, he was saying that he doesn't see it going past $6,500 all 2019. That's interesting. But before it starts to rise, it's going to go back down below 3,000. In fact, I just made my decision. I am going to do a special crypto talk because more people need to know this in our group today. And I will, and in fact, I know I'm going to do it because I'm not going to do the normal training. We're going to do it at 3 p.m. Eastern, 12 p.m. Pacific in our KGX community group. I'll make a post about that. And finally, plunging consumer sentiment is proof shutdown will wipe out Dow's gains. Shutdown will wipe out Dow's gains. New data reveals consumer confidence has plunged to its lowest level in 2 years. Historic data suggests the U.S. stock market ignores government shutdown. However, none have continued for so long, and falling consumer sentiment is a key indicator of an economic downturn. Ongoing government shutdown will affect the U.S. stock market. Consumer sentiment is used by manufacturers, retailers, and service providers to plan their strategies. Falling consumer confidence can quickly lead to production cuts and stalled investments. The drop reported by the University of Michigan has been pinned firmly on the government shutdown. Its consumer sentiment index fell from 98.3 to 90.7 this month, the lowest reading since October 2016. Chris Rupke, chief economist at MUFG Union Bank, says this report on consumer sentiment is the first concrete evidence that the economy is going to fall and fall hard if Washington does not end the shutdown. It is going to be hard to see real GDP growth of more than 1 to 1.5% in the first quarter if the consumer goes on a buying strike. Economists previously polled by Reuters had forecast consumer sentiment of 97.0. The 90.7 figure from the University of Michigan is a big departure from that number. Richard Curtin, chief economist for the survey of consumers, puts the decline down to a host of issues, including the partial government shutdown, the impact of tariffs, instabilities in financial markets, the global slowdown, and the lack of clarity about monetary policies. All right, out of that list, at least 3 of these are self-inflicted. What are those? Government shutdown, self-inflicted. Tariffs, self-inflicted. And lack of clarity about monetary policies, self-inflicted. The only things that is not is the instability of the financial markets and the global shutdown. However, the instability of the financial market is a direct result of the shutdown, the tariffs, and lack of monetary policy. So that's a result of those. So this all, it's avoidable. We got to deal with the consequences. Curtin also said the events would have a negative impact on Trump's ability to focus on economic growth, adding that the year ahead outlook was the worst since mid-2014. Wow. The White House has already estimated the shutdown could reduce U.S. growth by 0.1% for every week it continues. Reuters says economists put this figure at 0.2%. JP Morgan CEO Jamie Dimon believes the government shutdown could reduce U.S. economic growth to 0. They're saying, I saw this on the news, and this was even on Fox News, that the government shutdown could wipe out 1 whole quarter of U.S. growth. A whole quarter. Why we do? I'm not going to say nothing. Yet historical data says the U.S. stock market has previously ignored government shutdowns. Previously. But we've never had a government shutdown this long before. Not yet a sustained downturn. While the January fall off in optimism is certainly consistent with the slowdown in the pace of growth, it does not yet indicate the start of a sustained downturn in economic activity. For companies and organizations using consumer sentiment as a benchmark against which to plan their activities, they should be looking for trends rather than sudden changes. A fall in consumer sentiment in February would give further cause for concern. However, the immediate figures may weigh heavily amidst other concerns. Market reaction offset by manufacturing output, increase, and trade optimism. Emerging at almost exactly the same time as the consumer sentiment figures, the U.S. Federal Reserve's manufacturing output report provided balance. Factory production in the U.S. increased by an annualized rate of 2.3% in the fourth quarter of 2018. Output in 2018 achieved an overall 2.4% gain, the largest since 2012. Daniel Silver, an economist at J.P. Morgan Chase, said, while the manufacturing strength in December is a favorable sign for the economy, we should keep in mind that it came after soft results in earlier months. He warns other manufacturing surveys that have been weakening and the December hike may be short-lived. This would also be true if manufacturers take to heart today's consumer sentiment figures and revise their production output accordingly. Should the government shutdown impact GDP and further lower consumer confidence, the latter of which could further lower GDP, the U.S. stock market and the economy will suffer. If the shutdown and trade issue with China could be quickly resolved, however, investors and businesses could be inspired to ignore other uncertainty. You know what? The president is about to have a major announcement today. I predict he's going to declare a state of emergency, end the government shutdown, and use emergency funds to build the wall. We don't know which way that would go. I think it might have a short-term, immediate impact on the positive because people are going to get paid. So now you're going to have a shot in the arm for the economy. But this has never been done before. I mean, it's going to set a precedent that we've never been in. When Obama was president and he had a divided Congress, all of his things he wanted to do was never going to pass the Senate because the Senate was controlled with Republicans who were saying, I don't care what Obama puts in place, we're not going to pass it. If he says the sky's blue, we're going to say the sky's red. So as a result, Obama started doing executive orders and got pounded for doing executive orders, saying you're going around the Congress, you're acting like a king, a dictator, and a despot. And he got slammed for doing executive orders. But if Trump does this, it is far beyond an executive order. We're talking about using, it's like the boy who cried wolf. A state of an emergency is there for just that, a state of an emergency, a national disaster, fires in California, hurricanes in Texas, earthquakes, snow blizzards on the East Coast, cities that need that emergency funds. You don't have time to go through all the red tape. But we're going to do a national emergency over building the wall. We still have people in Flint, Michigan who don't even have water. And we didn't do a state of emergency to get that done. We got the pipeline done before fixing the water in Flint. This is, I don't know how this is going to, again, I don't care about politics here. Because here's what's going to happen. If Trump does this, when a Democrat becomes president and you have a Republican House and Senate, and they don't pass what the Democratic president wants, then the Democratic president now has a precedent because Trump did it to say, oh, well, I'll just declare a state of emergency. No. So the long-term impact on this, here's one of my biggest things I state. Never make a permanent decision to a short-term problem, especially if the problem is self-inflicted. The government shutdown is self-inflicted. The way our economy is self-inflicted. Don't do something drastic to solve a short-term problem. There's no going back. There's no putting the genie back in the bottle again. All right, that's all I have to say on that. So here's what's going to do. Today at 3 p.m. Eastern, 12 p.m. Pacific, we'll have a special broadcast in our KGX members only, where we're going to, because I see we're at a, not a turning point, but we're at a point in time where things can go in two directions real quick. And I want to give you guys some options. A little bit more detail of what I was saying earlier. Give you some options, and you decide what you want to do. And I'll share my options. I haven't decided exactly what I want to do yet, but I'll share with my options. So with that, you guys have a great day. I'll see you in a couple hours. Bitcoin Brandon out. God bless. Bye-bye.